Hey, this is Anthony, parent of Parent and Parent LLP. I'm really excited. They got a new format up here, and I'm going to be going over something today. A couple days ago, I did a video on the 1099K. Two things I mentioned about it. Number one, it could actually be a good thing because if you get a 1099K, well, that's business income, isn't it? And that could really open up the door to business deductions that may be worth more than what that 1099K you are getting. So it actually could be a really valuable tax device to establish lower taxes, in fact. The other thing I mentioned, and this is sort of what is quite curious about the American system of governance, is that there is a law. There's a law that was passed. There used to be a law there was a first law that says if you get any transactions from Venmo, PayPal, um, eBay of $20,000 or more, 200 transactions per year, you're going to be issued what's called a third-party reporting form, showing what your income was. Now, it's called a third-party reporting form because that third party, PayPal, whoever it is, has to report to the IRS about you. So we have three parties involved. So that's where that comes up. So it's sort of it's kind of a nasty thing if you think about it, because that third-party reporting is really tax compliance that the IRS is offloading to the person who's doing it. Like, well, this isn't my money. Why do I have to pay the taxes? And the answer is, well, because we're not going to pay it if you don't. That's why W-2s. Like, why do employers have to do that? That's a lot of work. Well, the answer is because employees wouldn't pay their taxes, and that's why that was put into place. So as we get to the 1099K, that was what the law was. Okay, the law was if you have $20,000 or more and 200 transactions, then you get issued it. Now, what Congress loves to do is, lie to us all the time. And one of the ways they lie to us is they use something called pay-go budgeting. Pay-go budgeting means pay as you go, and it's for revenue-neutral spending bills because the spending bills include provisions that will come up with extra money. One example that we saw in 2010 was with the HIRE Act. Part of the HIRE Act for all that spending is like, well, we have a whole source of revenue. It's free revenue coming in from the Foreign Tax Compliance Act, because we're going to create this whole compliance structure that goes around the world. It's going to be so crazy. People are going to have no choice but to comply. And we know there's just free money for the federal government to pick up. Okay. Now, what happened, of course, is that FATCA costs more money than the IRS actually brings in. It's pretty much a complete failure in every way of the word. And it also gives the IRS too much work to do, work that keeps them away from other things that they're trying to do, because you see an audit rate that has gone down drastically in 15 years. I mean, the audit rate is very, very non-existent, and there has to be something very specific, whistleblower sort of activity or something very obvious to trigger it. Even though we might be seeing the ERC credits audits coming soon, the IRS promises those, but we'll see about that. So the FATCA is an example of the lie. And if you go through a lot of spending bills, you find all these pay-go lies where all these, we have this source of money, this source of money, this money that's going to pay for it. Now, what happens when that claimed source of money pays for it? Does anyone go to jail? No, they get reelected and they just do it again. And it's just sort of the lie, because we have all this revenue neutral spending, however that works. Yet we just know what happens, right? We know what happens. Like, no, it's never quite, the savings never quite show up, but the spending does, right? We know that. So in 2021, we have the American Rescue and Recovery Act, and it's a big federal spending bill. So they need to say, where are we going to come up with this free money? Oh, well, what we do is we'll change that 1099K requirement, because it's working so well. Actually, they don't even look into it. And from $20,000 a year and 200 transactions, we'll just send it down to $600. We'll just do that. And you know what? That's going to give us so much free money to pay for all of this spending, and everything's going to be okay. So they went ahead and passed that. Now, the curious thing that happened here is, what was the IRS's response to it? What was the IRS's response to the lower threshold of reporting? And the answer is nothing. The IRS acted like that law wasn't even there. What they've been doing is sticking with the old law. They've been sticking with the old law of the $20,000 a year plus 200. They haven't been doing the $600 per year now. Isn't that something? You would think, boy, the commissioner of Internal Revenue is breaking the law. The Secretary of Treasury is breaking the law pretty brazenly, just ignoring it, making up their own law in effect, right? And wouldn't that be something kind of like serious? Wouldn't that be serious crime? Here's the law. Yeah, I just think the law is this, and I'm going to do it very overtly. I'm going to put it on my website, and I'm going to make it very overt that I'm going to pass a law. So you would think maybe, man, geez, maybe we should have some, supervision on this somehow. Or nope, it goes right out the door. No one thinks about it. And the IRS. Now, here's the thing: why does the IRS stick with the old law? And here's the answer: the answer is that Congress is completely high, out to lunch, full of loaded up with drugs. They don't know where they are because they assume that the IRS has unlimited ability to handle any amount of administrative things. And it's just, just give them another thing, just give them another thing, give them another thing. Well, here's the thing: the IRS has been understaffed for so long. It's not really funny, especially when you're trying to get something done. It's really not funny. It can really be mad, and they're not really good on getting notices out either. They're kind of failing all around. And so they're struggling big time as it is. And so here comes Congress. Here, get this, because there's free money. They just dump this on the IRS's lap. But the problem is the IRS knows, no, we can't do that, because you're basically going to end up sending a 1099-K, which is a new form, to way too many people that it's going to generate a phone call. It's going to, and we can't have that. We can't have people generating phone calls to the IRS, because right now our hold times are 2 hours. They get up to 2 hours, and we actually throttle back our activity because we can't get to everybody. So we actually back off of what we're doing, what we're supposed to do, because we can't get to anyone. But Congress says, no. You're going to hammer these people. You're going to hammer them good. So the IRS says, yeah, we're just not going to do that. So that's what happened. That's what happened. They just, nope, not going to do it. And they're getting away with it, impunity. So what we have is this situation where the IRS is enforcing the old law, okay? And no one's correcting them to say, hey, you really can't do that. One solution to bad laws is actually to enforce them to the letter, right? Because that would end up, right? If our tax laws were enforced to the letter, and if everybody was audited every year, it'd be done, right? So that's one way to get rid of the problem. So, sort of this pressure relief is sort of allowing the IRS to kind of continue, because if they were forced to do this, they'd be shut down this tax season. They would be shut down. People wouldn't know what to do, and our phones would be flooded with people trying to figure out what to do as well. So again, they're sticking with that old threshold. So here comes our heroes, always looking out for those concerned with liberty. These are the guys who dress up in the flag. Oh, they are so patriotic. They're going to tell you how patriotic they are. And they're concerned about liberty. They're true conservatives. We have Senator Cruz as part of this crew. Senator Cruz, in all his wisdom, instead of looking into say, hey, should we even have laws anymore? He decides, you know what we should do? Let's propose a law. Let's propose a law. And this one is actually coming from Mr. Haggerty. I'm not familiar who he is. Sure, he's quite famous, more famous than I am. But it looks like he is the presenter with Mr. Cruz. So here it is, the bold solution to the problem of the IRS not requiring the lower threshold and the IRS acting illegally. What Senator Cruz and others have done is they're going to pass a law to align with what the IRS is doing. So this is called the Stop the Nosy Obsession with Online Payments Act of 2023, the SNOOP Act, right? Oh God, these guys and their anagrams are going to kill me. They really are. Are these acronyms? They're acronyms. We need to have a law that outlaws bad acronyms. That's the first law we should pass. These are just obnoxious. The HIRE Act, and we have all these things and these little acronyms they love to have at us. Oh boy, isn't this something else? So here it is. Let me go to the second page so you guys can really see what it's all about here. So here it is. If we look at these, it's a pretty small bill. This is it. This is the entirety of it. So just on the second page, here's the meat of it, guys. Here's the meat. They're going to amend the Revenue Code of 1986. Oh, wow. That was really something. Reagan had no idea what he signed. Actually, no one really had any idea what they signed. It's just one of the lovely things, So here it is. A third-party settlement shall only be required to report the amount of $20,000 here, right? $20,000 and 200, right? And isn't that a sad state of affairs? This is what we have. This is what we have. Let's try to recap what's going on here, okay, guys? If we just sort of get what is truly happening. The IRS is breaking the law, and now Senator Cruz is proposing a law to make the law what the IRS is doing. And through all of this is lost the fact that, well, maybe the original 1099-K isn't really a fair thing to do. And maybe all this third-party reporting isn't the way to do that. If people that if we are actually a nation of self-government, well, we're all in that voluntary association together. Why would you need someone to why do you need someone to check on what people are paying? If it's all voluntary, it doesn't make any sense to me, because you have these third-party reporting. You can't trust us. You're going to go on other people's. Wow, you're really concerned. You're really concerned that I do what you want me to do. And so where's the invasion of privacy of that, Mr. Cruz? We got a little bit of problem there, don't we? Don't you think we have a whole invasion of privacy? I mean, you're a big liberty guy. And you know what happened to the Republican platform of 1912 when everybody was against the income tax? What happened to that, guys? Why aren't you proposing that? I mean, I'm sure you need some fundraising. There you go. You can propose a repeal of that. I mean, of course, it won't go anywhere because you'll make sure it fails. But at least why don't we be at least a little bit more aspirational in our lies to the American people? This just isn't enough. Just lying to me about this. I want a bigger lie. I want a bigger fantasy to believe in. Like the 31 times the House Republicans repealed Obamacare, but the second they actually had the ability to actually repeal it, they didn't know where it was. They didn't know where it was, but they sure knew how to. They sure knew how to fundraise off of that. They always do. They're so experts at that, right? So that's what we have now. This is the question I have for everybody, and if you guys have an example of this, I have another one in the back of my head. I'll talk about that later. And if you watch this channel, you know which one I'm talking about, related to a recent Supreme Court case called Bittner. If any of you have a case, this is what I want to kind of collect. This is where I want to collect cases of where it's clear the IRS is not following the law, that the law is this. And I'm not talking about something about discretion, okay? Because I think, your R&D credits there, you're kind of arguing the IRS is against Congress's intent, but you're kind of getting to a discretionary purpose. But I'm really talking about things where the law is very clear what it is. It says this, and the IRS is doing this. And everybody knows it. Or the people involved know it. Not everybody knows it. I probably wouldn't be asking the question if that was true. So I really want people to think about that. Where are the cases that the IRS is acting illegally? Because I'm not sure who offered this one, but the way to get rid of bad laws is to force it to the letter, right? I mean, if we want to get rid of this, we enforce everything to the letter and not let the IRS skate free with shirking their duties. They're shirking their duties, and wow, they just don't want to follow the law. But interesting how they act when they claim you don't, isn't it? So it's we have a different set of rules here, and the SNOOP Act. Senator Cruz has got this bold solution. So stay tuned, and we'll see where this one goes. This is Anthony Parent of IRS Medic. Thanks for watching.